We're just over 15 hours away from Walmart's earnings release before the opening bell tomorrow. Analysts expecting EPS to come in around 52 cents, an increase of 6.8% from the same period last year. Revenue of $159.5 billion would actually be a 4.7% bump. Now, for the last 10 years, Walmart has been America's biggest company in terms of revenue. It reported $648 billion of revenue, but Amazon nipping at its heels. The retail giant reporting $575 billion in revenue last year and posting bigger revenue growth. Our countdown closer says, you know what? Amazon stock is ripe for the taking. Joining us now is Magnet Investing Insights founder Jordan Kimmel. Jordan, great to see you. So you think there's still room to run on Amazon? I mean, it is a remarkable company. You would buy it at this price?
Yeah, great to be here with you, Ash. We have it in our accounts right now, so the answer is yes. And there's nothing like a new high and high relative strength for us. What we like, Ash, as you know, it's got to be revenue growth. That's probably one of the companies with the least revenue growth, just because the sheer size of it. But yeah, it's in our portfolio, as are a bunch of other healthy companies. We insist on healthy companies in our portfolios.
Yes, you say it's time to pay less attention to the Fed, do your spring cleaning. We always hear the expression, Jordan, buy in May and then walk away or whatever it is. Do you believe that's what you should do this time around or not?
No, that's not what I'm saying at all, actually. What I'm really saying is spring cleaning means pull out the weeds and water the things that are growing the best. And we have a tendency as human beings to not admit to mistakes and average down into companies that are disappointing us. My whole approach is value, growth, and momentum. It's got to have all three. So what I mean by spring cleaning is get the stuff out of your portfolio that is disappointing you, and for some reason it's not meeting up to your expectations. But no, we're not selling right now, and we're close to fully, invested, frankly, in top companies.
So you're not that concerned about the Fed, I mean, there's so much, it's all this hand-wringing over when and how many cuts will we see this year. The markets have done fine with those rates being higher for longer, if you like, but, is that something you follow daily, or do you just get on with your business?
What it is more important to me, Ash, is the advanced decline line, the number of new highs and new lows, and to make sure that we have a healthy environment. So frankly, a 5% return in safe money is where the market used to be. And you go to the stock market for 10%. If you had an edge, maybe you could do 15. But forget the Fed. We talked about 6 cuts, this cut, that cut. I'm more in tune with top companies and isolating intra-industry, the top revenue growth, the top margin growth, and buying them at a discount.
Very quickly, Jordan, I have to give you a shout out. We were looking at our records. In February of 2023, you were on the show. You recommended SMCI, Super Micro Computer. At the time, I think it was around $92. Now look at it, $952. That is impressive. Do you have another name for us that might be able to do that?
Well, you know what? Let me say, Broadcom is in that category, $30,000 stock. MEDP, MedPace, which I handed in earlier, it's a company that helps biotechs and pharmaceuticals to do their testing and their business. It's really emerging out of a great base. But I can't take credit for SMCI. That was my model, Ash. The Magda model picked it. I'll give the credit to the model and the team that helped build it with me.
That's very valiant of you, Jordan Kimmel. Great stuff, Jordan. Great to see